Let's check out the Shanghai markets right now, currently up by 0.3% at 26.26. We got some data out of China today showing retail sales in April were a better than expected 14.8% higher from the previous year. However, industrial output for the month eased to 7.3% year-on-year. Daniel So is regional economist at Forecast, joining us from our studios in Singapore. Good to see you there, Daniel. What do you make of the numbers? I mean, obviously we've got a whole pile of numbers coming out of China of late. Net, as a sum, what does it tell us about the economy there?
Okay, of course, the industrial output is sort of disappointing. But overall, I see is that the China economy may be bottoming soon. I will say that it will be bottoming in the second quarter. If you look at the lead indicator, look at how the consumer spending are actually stabilizing. You look at the astonishing growth in fixed asset investment. All this show that the China economy is certainly stabilizing and bottoming. But the key question is there a robust recovery anytime soon so that they can reach the ambitious 8% target, which I don't think so. Because if you look at industrial production, that's the key, the most correlated to GDP growth. You'll realize that at the current pace, industrial production has to grow at an average pace of 14% for the remaining of 2009, and in order to hit the 8% target. And I think that such odds are pretty low, in my opinion.
Then what's holding industrial output back?
Yes?
What's holding industrial output back? What is it about industrial output that's lagging to the extent that it might not allow the magic number of 8% of GDP to be reached?
I think because, fiscal stimulus is a strong boost. I would say it's definitely a strong boost. But the thing is, policymakers may have overlooked the damage from export. Because if you look at the export sector, is still really severely punished by the global recession. And China has a high exposure to the rich world country. And the China effective exchange rate had actually appreciated 25% since its depeg in July 2005. So all this price and volume effect is going to feed through to China export. And so the sharp contraction in export activity we're going to wipe off a lot of the positive effect of the fiscal stimulus. So at the end of the day, the Chinese economy may not worsen further, but a recovery may not be as robust as anticipated in order to fuel to hit the 8% target. Moreover, private investment, so far all has been spearheaded, all the investment is spearheaded by state-run firms, and private investment has not really picked up yet, so we see no sign. And if you rely solely on the government investment alone, it is impossible to sustain a recovery.
When you talk about the recovery in China, how pertinent is it to the rest of the Asian economies and maybe even the world that China does have a swift and strong recovery? It was interesting, some comments earlier on this week from George Soros, who was saying that he believes that number one, Asia is going to be the first region to pull out of the crisis, and number two, that China is going to overtake the US as the new world engine of growth. Do you agree?
Yes, but it may not be in the short term, but maybe over the medium or maybe the long term, because there's a lot of restructuring that China need to do now, a lot of reforms in terms of consumption, in terms of other areas, like even in the Western area. So there's a lot of potential. We can see 1.3 billion population and resources. There's a lot of potential, but I would not say it's in the short term, because all this restructuring take time, and China is on the way to move itself towards such goal. But right now, I would say that the prospect for China economy is still, is still grim in a sense that the sluggish growth may drag on for some time. So market so far is too optimistic about the China story leaving Asia out of the global recession.
Good question there, actually, because I was going to ask, do you think that considering the huge run-up that we've seen in the Chinese equity market since the beginning of the year, with a gain of over 40%, that market participants are also being too optimistic about the economic side?
If you look at the equity market right now, I think it's due to excess liquidity. There's abundant liquidity, and no matter any bad news or even disappointing data, but so far data has surprised to the upside. The market just keep going on a rally, but at the end of the day, you still have to depend on the external environment. So you still can't shift fast, in the short term, because no matter what, you want to break away from the reliance on the global economy for China to domestic. Yeah, all these things again take time. I mean, you can't do it so fast. So I would think that the China market right now is still a bit overvalued in a sense. If you look at the fundamentals, and the rally is too fast and it's too furious, so it looked more like a bear market rally. So I think we may see some correction soon when the economic figure, and especially from the export side, prove to be worse than expected, and maybe the central bank has to do more in terms of their interest rate policy in order to spur the private investment.
Potentially due for correction, then. I'm hearing that quite a lot these days. Daniel, thank you very much for joining us. Daniel So joining us from Forecast in Singapore.